It does take us to our talk of the tape. The remarkable run for stocks. Let's welcome our panel. Adam Parker, Trivariate's founder and CEO, also a CNBC contributor. Ellen Zentner is with Morgan Stanley Wealth Management. Both, as you see, are here at Post 9. Welcome back.
Great to be here.
Everybody here. I think the thing that stuck out to me, Elle, about your notes today is you suggest the stock market is extraordinarily overbought.
Yeah. Well,
Why?
I think when you think about where earnings expectations are, let's say we end the year at 240 and the market's looking for 280 at the end of next year. I mean, is that really achievable? And when you look at, volatility versus equity risk premium and sort of what's going to happen after the election and the uncertainty there, it just feels like expectations are a bit too lofty.
Adam, you sort of sit back and you're like, okay, the economy's good, labor market's all right, retail sales tell you the consumer's still hanging in there, earnings are good, and I'm going to get rate cuts on top of that ice cream. Well, that's a sundae that looks pretty tasty.
Yeah.
Is that correct?
Yeah, I mean, first of all, I love being with Ellen. We sat next to each other for years. My favorite economist of all time. So it's great to be here in person. Look, let's
glad we could make this reunion.
Yeah, come by. It's lovely. It's wonderful.
You want to talk to markets? You want to reminisce about the old days?
Listen, you got to take
good old days.
It's a human world we're in.
Okay.
All right. In terms of like the bull case, let's get frothed up for a minute. Let's we were 15% higher in a year. What happened? Yeah, I think the Fed just started cutting, and we're probably not halfway done. I mean, Ellen's definitely the expert on that, but I don't think we're halfway done yet, so it would be early to fade that. Maybe they flash a little more to you on China stimulus, and you could argue about whether it matters or not, but the market probably likes it if they give you more optimism there. I think for most companies, the average company gross margins could still go up. I mean, we're going to really stare at that in the next 2 weeks during earnings season, but I don't think input costs are rising. So I got the Fed cutting, I got China stimulating, I got gross margins going up. I think we have a positive skew on what we're going to get out of, AI. If you look at, obviously NVIDIA comes in town, it tells everyone it's fine, and ASML missed because it's Samsung, but then Taiwan Semi said it's fine again. But I think ultimately you're going to get some real companies telling you they're benefiting on the cost side from AI, and that's a big leg up if we get that. And we're going to run at a huge deficit no matter who wins, and it looks to me so far like when we run at a big deficit, some of that money makes it to the biggest 20 U.S. equity. So like there's a frothy cocktail that could get us much higher. I think Ellen's right. Probably the numbers are a little too high for next year, but as long as people don't get a growth scare on that path, and you dream they're higher in 26 than 25 and that whole thing, you could end up with a 7,000 number without it being that big of a problem in 6 months or 9 months or whatever. I mean, it's not in the distribution of outcomes. It's possible.
But at least a growth scare could be on the horizon. I mean, there is this really big uncertainty around the election out there.
Oh, for sure.
And you get an outcome that takes quite some time. If you get some civil unrest that comes with the outcomes, right? We're just now seeing companies start to really show concerns over how trade could pan out. You've got households are not going to go out to eat. They're not going to consume services if there is uncertainty and unrest in the economy. So you could at least have some near-term hiccups here. And that's where the fundamentals are.
Yeah, I was going bull case, not base case. But I was saying you could get a frothy bull case like ours. I'm not saying.
But yours sounded like a base case.
Thank you. I'm a compelling communicator.
But what was so bull case?
Well, I mean,
did you just state the obvious of what actually the environment is?
I think there's the big controversies from PMs are like, will we get return on the hyperscale investments? And not everyone thinks that we're going to get the AI proof points. I'm not sure everyone agrees that China will be like stimulative if it matters. I think the election is an uncertainty. I don't know what the answer is going to be, but I think the base case is the economy slowing a little bit, but not enough to freak people out. Most people took their recession probabilities down. I mean, Atlanta Fed GDP is like at 3.4.
Yeah.
So
there's no discernible slowing in the economy, and with the Fed starting at 50 basis points, I think the soft landing scenario has an even greater probability. I wouldn't even talk about putting a probability on recession. I would put a probability on soft landing just because that's the more optimistic take of it, right? The probability of a soft landing is very, very high.
The market's going higher is the base case. I think the big upside, which could happen, like, you want to get crazy? Like, maybe, Ellen and I wrote a note together. I don't remember if it was 2013 or not.
If you didn't bring it up, I was going to. It was 2014.
But we wrote a note in 2014 saying, hey, what's going to happen, year 2020 or 3,000 the S&P. And people thought it was crazy bullish when we wrote it together at the time. And I kind of feel like it's the same a little bit scenario now of like, what do we get, 2030 or 10,000?
Like, when we hit 3,000? It was December of 2019.
Man,
it was 1 month earlier than you predicted, Adam. What is wrong?